Hello guys, welcome to this new video. So in this video we'll be talking about break of structure and change of character. Yeah, so we've come a long way. We've treated market structure, we've treated pullbacks, and we've treated inducements. So now we're currently in understanding what break of structure is and what change of character is. But in this video, because of this video, I'll want to change that change of character to change of structure so that you guys can be able to work with it easily, which you now understand that okay, there's break of structure, there is change of structure. So you know when the market is just breaking structure, and you know when the market is changing structure into maybe market is breaking structure into in the bearish phase, and when the market is now changing structure into the bullish phase, yes, because I said bearish first. So that's just it. So since I've clarified that, yeah. So because everybody formally knows it as, because I learned it as change of character, but for the sake of this video, I'm just gonna change it to change of structure. So we're gonna call it, so it's BOS and COS. So what are we looking at? We're looking at what is break of structure, what is change of structure, what are the difference between break of structure and change of structure, and the types of break of structure we have and the types of change of structure that we have. All right, so this video is going to be a very long one, so just take your notes, take your pen, and let's write. So what is break of structure? Like it states, it's break of structure is basically when price breaks a particular structure, either a particular structural high or a particular structural low. So if it's high, it's to the upside. If it's low, it's to the downside. If it's in a um I think in a bullish market, but if it's in a bearish market, when price breaks to the high, price breaks to the high, yes, still the same thing. Price will always break short to the high if it's bullish and bearish. Yeah, so it's the same thing. So let's look at that. So let's say we are having a structure, price moving like this. So we currently have the low, the high, a new low that is higher than the previous low. So it's called a higher low. And then we have a new higher high. Now, the process of price coming to create this new higher high. Now, I want to look at this example. In this example, this is it's a major structure. We're still going to talk about advanced market structure in our next video. So we have to progress little by little and then take it step by step. So if the process at which markets used for, because market created this low, created this high, created this higher low, and moved from this higher low into creating this new higher high. Now, the process at which a price moved from this low to create this new higher high, you know that they took out this previous high. It means that was a break of structure. But according to my system, according to the system that I'm teaching, there is the actual way that we look at break of structure. We have to look at structure the right way. Now, I like the fact that that is why I structured out the course outline that it's going to be in a particular order, so you guys can learn certain things before we get to the next phase. Now, we've treated market structure, we've treated pullbacks, understanding valid and invalid pullbacks, how to know how to um get your valid swing highs and swing lows using, and it's being able to, with the ability to identify invalid and valid pullbacks. So we've done that, and we we've done inducement. I believe by now you guys should now know how to spot and plot out an inducement and know what it takes to pick out an inducement. So now moving to this next phase, we have to understand what a break of structure is. So I'm going to draw a particular um, illustration and then move from there. So we have markets creating this kind of structure. Let me make this a bit small. Price, boom. So now we can clearly see in this example that is creating price created low, a high, and a high, and higher low, higher high, higher low, higher high, and we have this here. We have this. Now this is still going to be a low and higher low because this low is actually higher than this previous low here. And we have this higher high, higher low. We have this higher high, higher low. Sorry, higher high rather. But price created higher low here. So this is a new higher high. And we still have the same thing just like we have here. Now, that's just basically the structure on the markets printed out. But we can see something else because of the knowledge that we have now. We now have knowledge of inducement. We can clearly see that this particular low that price take is the liquidity that was created by the inducements at that particular point. So there's a liquidity sweep here, which also will classify this place to be an inducement. Can call it IDM or any label. For me, particularly, I use this label for inducements. Oh, I'm on daily time frame. I use X to classify inducement. So that's inducements. This is our inducements here. So I'll have to type that out. Type that out. And then make it small. So we take this to be our inducement in brackets. So anyway, I put IDM, you understand what I'm talking about. So this is our inducement level here. And then price cleared our inducement level and went to the upside. I also have the same thing here, similar thing. Let me draw this out. We have the same thing here. Price took out this place, taking that place as our inducement at that particular point. So where is a break of structure? Now, according to my system, I don't mark this place as a break of structure. I don't mark this place as a break of structure. Now, according to the system, a break of structure is the structure is a structure that was taken, the high or low that was taken after price takes out an inducement. So you need to get that. The high or low that was taken after price takes out an inducement. So why I said high or low is because it depends if the market is in bullish or a bearish. If the market is bullish, price will have to take the create break the structure to the high side. If market is bearish, price will have to break the structure to the downside. So that is just my based according to my system. That is how I classify break of structure. So this structural eye that we have here, I don't classify it as a break of structure. Rather, let's look at it as price creating higher highs, higher lows, higher highs, and higher lows. And we have this higher high here, and then price took out this low as acting as an inducement, and then price went and then took out this high either by candle wick, as you can yes, either by the wick or a full candle body. Then we can now classify this level as a break of structure. So, like you can see here, types of break of structure. We're still going to deal on that. So, but this is just a particular type of break of structure. This we have basically just two types outside the five break of structure, two types. So this is type one, which is the number one we're going to be using a lot. So this is just the basically structural one. So this is not a break of structure. This is not a break of structure. Not as if it's not a break of structure, but we don't classify it as the re-break of structure. This is just price creating higher highs, higher lows, higher highs, higher lows. Because when we start treating advanced market structure, you understand that what price just basically did here was, according to our system, was that this is what we have. We have here to be these higher highs, small swings, small higher highs, higher lows, higher highs, higher lows, higher highs. That price created are not confirmed break of structure until price took out this inducement. So this inducement indicates to us that prices has done a I'll use the word major pullback. Price has done a major pullback to the downside, and then when price goes and take that high that took out that inducement, then we now have a break of structure. So basically, this is what we have. This is structure we're going to have. So it's just a single one, two, three. So that's the same thing. Accept it. So, and you need to understand that price is fractal. So you need to understand this. These things happens on time frame by time frame. So it's time frames to time frame. 1 hour, 1 hour does its own. 4 hours, we do its own. 15 minutes, we also do its own type of this kind of structure. You just have to understand, and we'll get to that point. We'll take them time frame, and how to trade them. So basically, that's how to identify break of structure. So this is not a break of structure. It is now a re-break of structure. These are those higher highs, higher lows, are price creating. And then the moment we see price take out these inducements, then this our high, this our major high is confirmed. So all we need to see is price go back and take clear out that high to now see that place, to now confirm this low as our major low, and this place to be our real break, our true break of structure. So I might even call it T. I might let you can okay. Let's even call it a true break of structure, but it's still a break of structure. I'm just joking. So it's break of structure. So basically, what we have here is like something like this. We have this. Oh shit, not this one. We have basically have something like this. This is what we have. We have the single leg, the pullback, single leg, the pullback. So that's the major structure we're having. So that's the major. Um, so that's why this place, this OB, this oh sorry, sorry, I had to cough. So sorry. Um, so that means so it means basically means that this can you see this leg with this structure, with this big structure? These are the places that we can now trade our order blocks, the real SMC. This is where we can now trade order blocks. These are the order blocks that you can trade off like very well. You can trade off all these other block. That is why I don't. But you see all these small ones. But like I said, it's fractals. It ranges from it differentiates itself from time frame to time frame. So the because liquidity is actually fractals too, and uh the liquidity on higher time frame liquidity is always going to be strong. The higher time frame liquidity is always going to be stronger than the lower time frame liquidity. And what I basically mean by higher time frame liquidity is stronger than lower time frame liquidity is that the liquidity on daily is going to be stronger than liquidity on 4 hours. When people hear you say higher time frame, they typically just mean you're just talking about daily 4 hours, and then you're not comparing it with 1 minute, 5 minutes. No, daily is higher than 4 hours. 4 hours is higher than 1 hour. So it's like that. It's fractals. So weekly is higher than daily, but I stop my analysis on daily down to 15 minutes. That's where I end my analysis. I don't go anything lower than 15 minutes. 5 minutes is basically just for refinements of POI, which we're going to treat. And let's just continue. So that's basically how to identify uh, break of structure. So on a flip side, on the flip side, so it's basically so when price does like this, so this is basically price creating a new higher highs, higher lows, higher highs, higher lows. So until an inducement is taken, once this inducement is taken here, bam, now we have confirmed this is our major pullback. Now price has this is our high, major high, this is our major low. We're going to treat that in advanced market structure, and this is going to be our major higher lower high. Yes, because it has been confirmed by price taking out this inducement, and then once price takes out this high, this low, this major low here, then we have this place to be our break of structure. This is our break of structure. Sorry, according to my system, according to the system that I'm teaching you. So this you can just count these levels to be. You can still highlight them if you want to highlight them as break of structure so that you will not miss anything. But this is the true break of structure we're looking at that we want to see price do. So this is price just creating I'll just call it higher highs, higher lows, higher highs, higher lows. And this is the major. This is major highs, major. So stuff that I hope you guys will be able to understand it. And let's just continue. Let's continue. So let's look at charts. I think we should look at the chart first before we now go into change of structure. Okay, I'm thinking let me do it like this also. Let's take these. Let us treat types of EOS and then look at what is what they call it chain of structure. So let's look at now let's look at the types of BOS. Like I said, this is number one type. This is the first type of BOS that we're going to have. This first type of BOS reconstructure, which is price taken out after price taking out an inducement, and then price goes back and breaks that high that created a move to price for price to take their inducements. Then we have a break of structure. This is the first type of break of structure we have. Now the second type of break of structure we have is for, let's say in a scenario whereby price is reacting a from an A or another time frame valid POI or order block or supply and demand level. The price is reacting from those levels. And on that particular time frame, I'm going to draw it out. I'm going to illustrate it. On that particular time frame, comes down and breaks the most recent pullback. Then that is a break of structure. That can be classified as a break of structure too. Now, this is what I'm talking about. Is what I'm talking about. It's not a chain of character. You need to understand that there's a tiny difference, a thin line difference between BOS and change of character according to our system. So let's say, for instance, this is the 4 hours. Let's say this is the 4 hours. Uh, let's say this is the 4 hours POI of interest. We're going to get there, or let us say OB order block. Oh, okay. Let's just say point of interest. Let's just say point of interest. Make this big. Let's say this is a from the left side, this is the 4 hours point of interest. And then as our zone price has been coming from somewhere like this, we have let's say and then this. And then we have price now resume from here going to the upside, doing its thing, and then price gets into this place. Now we can clearly I'm going to do a different scenario. It's so like two different type of scenario. And then price taps into this place. Now, the moment now this is we already identify this place as a valid POI. Now, if the moment price comes down and breaks this particular low, then we can classify this as a BOS. So those are the only two types. This is a BOS one. This is a break of structure one, and this is a break of structure two. This is break of structure one, and this is break of structure two. These are the only. Now, remember, it has to be on the same time frame. This you have to remember that we are on a 4 hours time frame. The time frame we are here now is 4 hours. This in this scenario, this is a 4 hours time frame. All these structures are 4 hour structures. This is 4 hours POI or other block, and then price reacts, and this is still same 4 hours candle. Once 4 hours take this place out, then this is a break of structure on that time frame. That is the second way to pick out break of structure. It has to be on that time frame. Now, if price taps into these 4 hours and this level is this structure here is 1 hour, and then price takes it out, it is not a break of structure on 1 hour. It's only a break of structure on that same time frame that is reacting from that same time frame POI. You need to understand that. If this is the 4 hours POI and this move that is here is 1 hour POI, and it is 1 hour that owns this has this low, and maybe the 4 hours low is around here, and 1 hour takes this place, and the 1 hour takes this low. This is not a BOS, not a BOS on 1 hour. It is a change of structure on 1 hour. So basically, when price takes